Welcome to the Business and Wealth live stream. It's going out to YouTube, LinkedIn, Facebook, and wherever else you're watching this. Today, I've got my special guest again, Trent Giumelli, real estate authority and property multi-millionaire. Thank you for joining us again, Trent.
Mate, thanks for having me as always. Really enjoy this.
Now, on today's live stream, it's all about business and building wealth. And today's live stream is very topical. A lot of people are talking about it at the moment, and that is what's driving the property boom? And more importantly than that, is there a bust on the way? So what's your thoughts on that?
I think there's a lot of reasons for driving the boom at the moment. Obviously, particularly in southeast Queensland, I mean, people wanting to get out of Sydney and Melbourne for obviously the lockdowns, who wouldn't?
Yeah.
Someone else put it to me very, very bluntly the other day is, a lot of people are spending money on things they don't normally spend money on. Cars,
right.
Things like that. And it's because, a lot of people have been saving for holidays or whatever, and they're using that money and putting it into the system. So it's, I think there's a whole roll of different things that are going on at the minute. And that's essentially what's pushing the markets up. I know here in Noosa, it's just berserk. Like, it's absolutely mental. People spending $3, $4, $5, up to $10 million off the plan, like without even viewing the house, they're spending these dollars. And it would be the same down on the other end of the coast as well. It's just, And I know the Gold Coast is the same, Brisbane's somewhat the same as well. So, there's a whole range of different reasons why, but they're the ones that I sort of stick to at the minute.
Yeah. And how long has this been going on in your experience? You follow the property market and real estate market very closely.
Yep.
Has this boom, as the kind of incline, has that been happening for 2 years, 3 years, 5 years?
Yeah, that's a really good question, because there's a couple of property clocks that I follow. One of them is Phil Anderson, and the market has been moving somewhat for about 12 to 18 months, and it's talking to some colleagues and other people in the industry. We all sort of feel it's probably got about 18 months left in it, maybe 2 years. But it's really going to happen, what's going to happen next is really going to be the defining moment as to how it all filters through. I mean, if the stock market crashes, obviously that's going to have an impact. If this Evergrande group in China, for instance, that goes down, that's going to have an impact. So there's all these different variations going on at the moment that could impact the market very quickly. But all accounts, most people I'm speaking to are sort of saying about that 18-month marker. 12 to 24 months is generally what they say, but most of them are sort of sitting around that 18-month marker.
Yeah. And what's really interesting, someone that's not in the property game like yourself, as heavily as yourself, watching from the outside, you see the prices going up and up and up. And even during a pandemic, like, who would have thought at the start of 2020, when the world was going to fall down and the sky was falling in, who would have thought that we'd be talking about property prices 18 months later being 3, 4, or even 5 times, more expensive than what they were 2 years ago.
Yeah, it's counterintuitive, that's for sure.
Yeah.
Massively.
So, so when you talk about, things happening in China and, interest rates going up, do you see those things, and I don't want to kind of, put you on the spot, but do you see those things not having any impact? Is there any possible way that China does their thing and our property prices keep growing because of what's happening?
There's a potential it could. I think, if that, my thought process is on it, if it does go down, those groups have got a lot of US investment and stuff like that. But if those groups did go down and it did have a ripple effect or cause the markets to crash, I think we mentioned last week, my initial thought was that it will more than likely affect our resources sector more than anything. Because they're not buying as much, coal or iron ore or, bauxite or whatever they're getting to build. So that would be my immediate response to the question. But it's hard to say, mate. I mean, it could and it possibly would, but who knows at the minute? It's just everything's so counterproductive as what it's doing and what it's normally supposed to do. It's just a little bit all over the shop, to be honest.
Yeah, absolutely. And, and you see people like Robert Kiyosaki. I was watching a bit of his videos before coming on today because I like to research topics. And he's already predicting market corrections and how to make millions in the storm that's coming. He's already on that angle.
Yeah.
Is that a marketing thing by Robert, one of his masterpieces of marketing again, or is it actually happening? Are we already seeing those market corrections?
Mate, I don't think it is. I mean, obviously, Robert, I follow him quite closely too. I watched quite a lengthy video on him, about 40 odd minutes the other day, and he was talking up gold and silver, which we talk about anyway. I think some part of it is marketing, but predominantly I think he is, one of those people that is ahead of the game. He understands and reads the markets quite well. He's openly said he's slowed down on his real estate acquisition, which is interesting because he's heavy into real estate, and he's more focused in on gold, silver, and crypto at the minute, just because of where the markets are at. But he also says crypto is going to fall in a hole in January. So yeah, I think he's ahead of the market, but there is some element that would be a marketing thing as well.
Yeah, a bit of element of hype there to sell his next book, his product, his course, his cash flow. That's all it's about.
He's a business owner. Why wouldn't he? So
absolutely.
It's very interesting to watch though. I've been watching a lot of senior guys overseas. Some commentary around that. You take everything with a grain of salt. It is what it is.
Yeah.
But the same rhetoric's coming out of all the same people, the same things being said over and over and over again. And when that starts to happen, you start to look at it more intently and say, okay, something big's going on behind the scenes here that probably not a lot of us know what's happening. I mean, I'm not a stock market person. I don't quite understand it. I've never done great on it. But certainly, they're certainly all talking about the same thing, and that rings alarm bells in any sequence. And then when what I call him the real estate guru, which is Robert, says that I'm not acquiring property as much anymore, that's a bit of an alarm bell. So, you got to look at that for what it is.
Yeah. And do you think he's doing that strategy because of the high prices in property? Is he waiting for the market to not be so hot and then 100%. Jump back in?
Absolutely. Yeah, so there was another thing he said the other day that Warren Buffett's apparently cashed out and got, I think it was 150 million, but it might have been 150 billion.
I've seen that too. Yeah.
In cash.
Yeah.
Everyone's calling, he's too old and all this sort of stuff, but he's renowned for making the right decisions at the right time. And that's an interesting point. I mean, we're finding it harder and harder to find good sites purely and simply on the price. You've got the market doing this, you've got the end sale price doing that as well, and then you've got steel that's done this as well. So it's getting harder and harder to find good deals, and it's at that time where most professional investors step back, let the retail investors do their thing. They'll look at other stuff and invest elsewhere. And then when the market all comes to a head and, goes into a hole, which it will, a lot of people hear me say, think of 29 on steroids, because that's where I think the next one's going to go. We sit and cash up and wait for the perfect time, because when that happens, you go and get things cents on the dollar. What might have cost you $2 million might cost you 500 grand.
Yeah. So,
or less in some instances. So.
Right, that's right. So that was going to be my next question. Like, how do you make money in a downturn? But obviously, depending on what you read and what you subscribe to, there's some gurus and experts out there that say you actually make more money on a downturn.
Yep, absolutely. My accountant many years ago, Gary Lisser, his name was, always said to me, he always made most of his money in a downturn.
Yeah.
And it's because you're buying at rock bottom, and a lot of the professionals again just buy at rock bottom and then improve or sit and hold for the market to come back. It always comes back. It's just a matter of time, and if you can hold it. Now, if you're doing that with cash, it's obviously a lot easier than doing it with borrowed money. And if interest rates come up, which they're earmarked to do, I think probably after the next federal election, that's going to. You've got a better understanding and a better opportunity if you're doing it with cash. That's all I'm trying to say.
Yeah. And is it fair to say that, doing the opposite to the herd, the opposite to everyone else actually gets you results? Because if you're just following the herd and buying when everyone else is buying and selling when they're selling, aren't you just getting the same results as them?
Absolutely, man. That's one thing that I'm renowned for. So whenever the people are going that way, I'm going the opposite. So it's how I facilitate everything that I do in everything in my life. You know, if everyone's
Yeah.
going that way, I'm that way. See you later.
Yeah.
There'll be better opportunities and less competition down that way, so to speak. So it's
Yeah.
it's quite interesting to watch it all, actually.
Yeah. We were the same with advertising when the pandemic started. You know, there were so many people pulling back their ads. You know, the airlines couldn't advertise anymore, coffee shops, gyms, all of those people couldn't advertise anymore. And advertising prices just went down and they got like super cheap. So we're just kind of ramping all our clients up, as you know. So, yeah, it was great. Yeah.
It works in every field's exactly the same. You know,
everything.
And it works so well. It's just having the confidence to be able to switch your mindset and go, you know what, bugger it, I'm going to go this way and go against the grain. And one of the funny things I heard during, I think it was the GFC, was, you know, a chap was talking to a business owner, and his business, it was a lumber business at the time, was doing really well when everything else was in the toilet. He goes, you know, what's your secret? And he goes, I just chose not to participate.
Yes, that's right.
So I thought it was brilliant. Yeah. You know, it's just that's the total going the other way mentality. Yeah. And he was just absolutely creaming it. So
yeah, I got a story on that. In the for those that can remember, we had a global financial crisis many years back. I think it was like, you'd know the days, like 15 years ago. Was
07, 08.
2004? Was it 04?
Hey?
It was the global financial
07, 08 was the GFC.
07, 08, that's it, yeah. Yep. And so we had a swim school in 07 and 08, and you know, everyone was predicting, you know, the sky was going to fall again and things were going to get tough and people wouldn't buy lessons and all of that. And I actually sat my team down and I said to them, we are not participating in this global financial crisis. We don't want anything to do with it. We're not going to have anything to do with it. We're going to double down on our skills. We're going to teach better. We're going to deliver a better product. We're going to double up on the marketing. And we did exactly that. And 12 months later, we had our best year yet in the middle of a global financial crisis.
Yep. So no, it's easy to do. It's just having the confidence to go against the grain.
Yeah, that's really good.
A lot of people get caught up in the emotional side of it and in their head. There's always an answer to it. You know, I said to my daughter the other day, yesterday actually, you know, I just said, remember this statement, you know, is every action has an equal and opposite reaction. And you got to use that to your advantage. So she was crying at the time, just so we're clear. So, so it's a bit of a different way to do it, but
yeah. Just speaking about kids and stuff, one of the things that I say to my boys is, don't let other people dictate your future. Like, take control of your own future, right? Yeah. Don't be on someone else's agenda. And I guess when you're watching the news and if you react, you know, to the market and you react to the media, which don't always tell you the full story, by the way, like, you know, you can be led astray, right, by the media and, you know, and get caught up in that hype. So if people 100%. Are watching this, you know, they're watching this, Trent, and they're listening to you talk about, you know, doing the opposite to everyone else, you know, and taking advantage of opportunities, you know, even in times that aren't great, or taking opportunities, you know, of what's available right now. What sort of opportunities does your company have on its plate at the moment, and how can people get involved?
But quite simply, I mean, we welcome, you know, individuals. We specialise in light industrial, commercial warehouses, what I term man caves. You know, land lots are getting smaller. People are still getting caravans, jet skis, everything in between. One of our diversifying aspects that we've just recently done in the last 12 months has moved into self-storage as well. You know, the rental yields on those is just absolutely berserk. You know, we're talking 20, 25, sometimes 30% per annum return on thing. But, you know, if anyone wants to talk to us about that, we do work with individuals who can participate on development projects through a fund. You know, money's secured the same way as you would on your house. If you had a house with a mortgage on it and you sold it, bank gets paid, you get paid second. Works exactly the same platform. Money's secured via way of a mortgage. You know, and we get a lot of people, different people that come in. A lot of people at the moment are sort of 45 to 55, looking to bolster their lifestyle or cash flow or whatever it might be. So, you know, it works really, really well. You've got to obviously understand it, but we're more than welcome to have a chat with anyone who is interested to come and have a yarn to myself or the team, and we can go from there.
Excellent. And what about, those people that have seen different companies before offer things like that? And I know you and I were chatting the other week, and one of your competitors recently went out of business. They copied you for 2 years, or tried to copy you for 2 years. Got really slick with their marketing and spent, probably almost hundreds of thousands of dollars on their marketing. And yet, here we are a couple of years later, and now they're out of business. Can you talk us through that? Why does property developers go out of business like that, and why is your company different?
Mate, the long story short to it, and I'm not going to lie. I mean, we've all had losses. Things happen. It's property, it's real estate, it's development. Things happen, so you got to get to that fact straight away. But the one thing, and I'm most proudest of, is we've never lost a client's money. And the difference really is ethics. That's all it comes down to, because you and I have spoken about that particular group, how good their front end marketing was, and they were getting people left, right, and centre. In fact, we've got some clients who, put some funds in with us and also with them, but they've lost their monies over there now. I've got staff members who are trying to ex-staff members, who are trying to replicate what we do. But the basics comes down to ethics. That's it. You do the right thing by your clients, the right clients will do the right thing by you. A lot of people in the industry don't have that. They're just, it's more of a greed mentality. I've got this, a showy thing and all that sort of stuff. I could live in a tent. I don't give a stuff about the house behind me or anything in between. For me, it's always been about doing the right thing, and that reflects in the fact that we, most of our clients, I'm not going to say all because everyone's situation changes, but most of our clients continue doing business with us over and over.
Yeah. And
hope that made sense.
Yeah. And what sort of returns do your clients get?
Look, at the moment we're seeing an average of about 40 to 50% return on cash.
Yeah.
So it's obviously the market's doing quite well, and with our self-storage, it's really bolstering things up. But I've got I've got two that are finishing at the moment that are going to be somewhere between 55 and 60%. The lowest we've ever paid out is 25%. So individuals can take that as they will. But the yields are sensational. Just to add to what I was saying before, I mean, a lot of people question as to what we do, how we do it, and how we're able to achieve those sort of returns. The simplicity of what we do is, versus buying a house or buying a block of land and putting one house on there, we buy a block of land and put 20 to 30 dwellings on there. That's how we create the equity and the return. So, and we're not reliant on the market conditions as to which way they go. So it's probably one of the, besides capital preservation, that's the second biggest question we get.
Yeah. And I probably should clarify those returns that you're talking about on your two current projects, the 50% or 60%, that's return on cash. So if someone puts in 100 grand, once the development's finished, they're going to walk away with 150. If they put in 200 grand, they walk away with, 300 or whatever it is, right? Yeah. So they have the capital back plus the return. So it works. It works really well. It's very simple. That was the other thing is, why others don't work. They tend to, I use the KISS theory really, it's built into the back of my brain, is keep it simple, stupid. People understand it. It's nice and simple. Documentation's in place. Everything's, planned and done appropriately, and everyone's protected. So that's the key part to it all. Yeah. And you've got a case study web class that people can watch as well. So we've put that in the links, and if anyone's interested, watch the web class, because I know you unpack a feasibility study in there and you go over all the details. So that's probably the first place for people to start. And then from there, I know you can book a consult call with Trent if you're interested.
More than happy to have a chat with whoever's interested and work through it. It's not for everyone. We understand that, but certainly those people who do inquire, they are pretty happy with the result at the end.
Excellent. All right. Well, Thanks, Trent, for the insights today on the property market. I look forward to talking with you next week as well.
Absolutely. Anytime.
Excellent. All right. Well, thanks, folks.
Thanks, guys.
And if you need more information about Trent, just see those comments in the comments below. All right. Cheers, everyone.
Thanks again, mate. Thank you.